Even if you don't get anything out of this video, just get it that life rewards you for the amount of risk that you take. And at the end of this video, you're going to understand those who are going to be the millionaires of the next decade. This is not going to be a long story, so just hear me out. If you look at the life cycle of a company or a business, it is often a curve that starts from the point of origin, that is the launch phase or the startup phase, as the case may be. At this phase, there is no sales yet. The company is still battling with idea creation and product development. And of course, at the launch and startup phase, there is about 80% mortality rate. I mean, 8 in 10 businesses found or startups often die at this launch phase. And any business that escapes this launch phase gets to the growth phase. At the growth phase, they're beginning to see some sales and they've gone to market. There's revenue now. And from this growth phase, any company that escapes this growth phase gets to the pre-maturity phase. This is where other companies are beginning to compete with them already. They're beginning to see increasing sales and revenue. They're going to already have customer base, etc. From the pre-maturity phase, they get to the maturity phase. This is often the plateau of so many businesses or companies, as the case may be. At this point, the company have to make a strategic decision to either decline after maturity or find a way to increase their revenue. This is not the most interesting part of the story. The next curve or chart you're going to see here right now is the funding life cycle of a business. Now, the funding life cycle tells the story of the kind of fund that businesses can access across each phase of the business life cycle. Now, look at the curve here. You're going to see that they can access fund from debt, which is of course they can raise money from the banks and stuff like that. They can also access money from their own revenue or sales, as the case may be. And an interesting one above the top here is what you say in the risk. Now, at the startup and launch phase of a business, it is very much high risk. So they're not going to get money from debt. No bank is going to lend a startup money. And of course, they don't have sales yet. So it's as good as they have zero money or revenue in at this point. But then how do they get money? They get money from angel investors and VCs who are ready to bet on these high risk startups. In fact, angel investing and VC often feels like gambling to me. But of course, very high risk, but very high reward because there's 80% mortality rate. The people who are ready to take the risk or who are ready to bet on this high risk business at a startup phase are the people who are going to be millionaires in the next future. After these people, the next set of people who are going to also make huge bet is the people who invest in the company at the growth phase. Then from the growth phase through the prematurity to maturity is where most companies IPO, they become a public company. This is where most of us jump into it. That's why our reward is not that much. So the people who take the risky bet at a point where businesses have 80% mortality rate are the people who are going to, of course, become the millionaires of the next decade. And we obviously seen this